Hello and welcome. You're watching In Your Interest. I am Shweta Kothari. India's antitrust body, the Competition Commission of India, has reached an initial assessment that the $8.5 billion merger of Reliance and Walt Disney media assets in India harms competition. The main concern revolves around the combined entity's control over cricket broadcasting rights. Now, this marks the most significant hurdle to date for the planned Disney-Reliance merger, which aims to create the largest entertainment company in India. The $8.5 billion merger, which was announced in February of 2024, aims to combine the two media giants into what would be the largest entertainment conglomerate in India, a move that could reshape country's media and entertainment landscape. However, the merger's potential to impact competition has raised significant concerns, leading to CCI closely examining its implication. What does it really mean for the merger going forward? Let's understand that. Joining us on the show is Srinath. He's a policy researcher, corporate advisor. Srinath, good to have you back on the show. What are we making of what's coming out of CCI? We know that there is an initial hurdle, and that is with respect to the broadcasting rights for cricket. Do you think the merger will go through as planned?
Shweta, I think it's a double-edged sword, right? I mean, if you stall it, how are you going to break up this entire merger? Because the sore point seems to be cricket, and the rights actually fall off in 2027. And I think the entities will be very fair to say that they can't even hive off these revenues to any other bidders. That's a reality. Two, I think very interestingly, we'll have to look at this. If not them, who will buy it? And I'm saying an academic interest. What stops friendly entities from being parked with some of these assets? And once some of these terms of the approval are met, over a point in time, consolidation happen again. And this is something that we've seen play out in India. So can CCI truly be independent and hold fort? Or is it just optics around the process of all of this? And if I chat with some of the market analysts, I think that they seem to be talking about the latter, discounting the fact that this is actually a very, very severe or serious regulatory concern. And it looks like the market punters are saying that it is probably more optics, and the deal will come through. Probably some parts here and there that the entities will give up, but friendly assets will be parked with others.
Okay, optics at best, and I think that is what we're reading into it. But we're given to understand CCI has raised about 100 questions, and the most pertinent to which is the cricket broadcasting rights, both the streaming on TV as well as streaming otherwise, both of which will expire by 2027 and 2028. So it becomes therefore incumbent upon these two entities to keep broadcasting cricket up until that point. Do you think that, that is going to be a sore reason why perhaps CCI will be holding the merger to go through up until then? The fact that these licenses cannot be sub-licensed as well, because this will create another hurdle with cricket broadcasting in India. So what is the road ahead, if I may ask, if that is going to stand out as a sore only reason for the merger to not go through? What can these two entities really do to shave off some of these concerns?
Theoretically, even if you were to hive off the cricketing assets, who are the other buyers and at what price? I mean, they can't match this current bid. That's the very fact that these entities are holding it on. And two, the very fact that cricketing assets watch for free as a strategy is to also hook the consumer onto this platform. And will let's say this merged or to be merged entity give up that right where they want to actually grab the eyeball and probably the later wallet of the consumers? The reality is, in India, we are a cricket crazy nation, and giving cricket for free is a sure shot hook for us to probably surrender our airtime, data, everything to the platform. And so I think they're not going to give in so easily, the entity. Okay. And this is one of the largest conglomerate in India. So can the regulatory authority really dig in their heels? I kind of doubt it. And this is why I'm probably looking at what the markets are saying. This is a mere optics or the process of it.
All right. And let's say the merger does go through. Data suggests that the combined merged entity will control about 40% of advertising market. it's a serious concern for those who want to advertise, especially during cricket matches and for audience at large, when it comes to competition in India. Let's say both parties agree to give up on some of those concessions and make some concessions which make CCI happy. But looks like at the end of it, it's going to be the advertisers and people like you and me who will be sole losers.
So that's true, Shweta, but we're discounting the fact that a lot of other industries already have that kind of monopoly, right? I mean, telecom, for example, near duopoly. Airline industry, if you're talking about, let's say, airline industry, there are only 3 airlines today. And if you're talking about premium segment, discounting the fact that Indigo will have business class soon, it is actually only one single, the Tata entities which offer business class. So we are seeing in a variety of markets, let's say PVR, Inox, again, brute market share in multiplexes. So a lot of industries, we already have plethora of near monopoly, so to speak. And so this kind of is, this decision of CCI for this will also probably open a Pandora's box for other industries.
Okay, and let's for one instance assume that there will be more concessions, discussions, negotiations between the two parties and the CCI. What could come by the way of those concessions right now? What are you hoping that both the parties will give up on in order to retain those cricket broadcasting rights?
I mean, if I were to speculate, I think will the Indian entity benefit from reduced discounted valuation so that the foreign party gives in to the Indian party to make this deal follow? Probably yes. I mean, I'm thinking like an Indian businessman here. And 2, I think even if they have to hive off a couple of channels to other potential buyers, I think except for cricket, they will be very willing to give up some other channels out of 120 channels. Give up channels to, I'm saying, friendly owners who will buy it, either warehouse it for them or actually buy it at its valuation. And I think both these options are open, but I don't think they can afford to give up cricket, which is one of a prime strategy for this. And I don't see this entire thing only about cricket. I think I see this bouquet of platforms that they will offer as the consumption economy model, that they want us to, whatever we think of media and entertainment, go to one platform, which is Viacom, Disney, so to speak. And I think that's the largest strategy. And the loss leaders, cricket could be a loss leader for them over a point in time. Just imagine I'm extending the thinking process. What if India actually hosts the Olympic 10 years from now, and we see one of the promoter is actually on the the Olympic Association member. And what if India bids for Olympics and hosts it? This is the platform which is going to probably benefit for bidding for those Olympic telecasts globally, right?
Absolutely.
So I think it's a long-term strategy for them, for media and entertainment business. Don't look at it as short-term cricket. I mean, that's only the revenue, but the revenue could be a loss leader for a long-term game.
Absolutely. There is a long-term game at play, not just competing with the likes of Amazons and Netflixes, but also competing with Z's and Sony's in India. And talking about Z and Sony, we talked about that merger for a very long time until it fell through. It faced similar sort of hurdles in 2022. Those hurdles, of course, when one is working through them, looks like could have some impact on the merger. That merger did not go through. Do you think this hurdle posed by CCI right now in form of questions, in form of saying that this is going to harm, competition, especially when it comes to cricket broadcasting, could impact the merger process?
No. Shweta, this is my view. If an Indian conglomerate or a large entity which is important for not just the market or the economy, the consumers, and for the policymakers, if they want a deal to go in a certain way, my belief is it will. They might have concessions for optics, but it will go through for the simple fact. I think we also have to respect that domestic consumption would also need domestic protectionism. If the US government is lobbying on behalf of, let's say, the big tech or Disney or whatever, why should Indian government or the Indian bureaucracy not actually protect the interests of Indian conglomerates? So I think we also have to look at it from that perspective. If we open our doors and allow for foreign entities to take over much of the market share, especially when the consumption is growing, we are going to be in trouble much, much later. So I think look at it from a strategic trade-off point of view. Indian entities, large ones, will have a way to get going on this. But I think it's, as the Chinese or the Japanese would call this, they would be face savers for all parties concerned.
Okay. And before I let you go, we are given to understand cricket broadcasting, of course, is one bone of contention. There are other reasons as to why the merger is being put to questions and being scrutinized by CCI as we speak with respect to how it will impact competition in other media segments. What are these other media segments that could have a potential impact in your assessment, Srinath, before I let you go? As a result of the merger going through, what other segments are we likely to see some impact on, at least when it comes to smaller players operating in those segments?
See, smaller players cannot claim that, let's say, the entertainment segment could hurt them because there are quite a dime a dozen, and if you split them into various regional language buckets, then you will not have a monopoly at all. News today, again, is very, very fragmented. It is sports and OTT, especially the likes of Netflix and Amazon Prime, which have a large monopoly. In India, we have an advantage. Anybody who plays the linguistic card can actually break any monopoly rule to say that we are not a monopoly because we're a different language. We cater to a different audience. And I think, but for cricket, we don't have much of large market share at all. But if you club all of them, 40%, is it large? I think, look at other industries, probably it is not large. And I think the real nature is what controls or levers will CCI or the government have tomorrow for pricing control for consumers. That's a larger challenge.
And I think that is something that will really affect people at large, come to think of it. They may not be concerned with the merger, but they will definitely be concerned when suddenly there is a hike with respect to, viewing channels and viewing platforms and streaming platforms. I think that was likely to bother consumers more. And that is something I think CCI will also have to look into going forward. Those concerns have been raised by CCI, and there is some time before the merged entity really comes to fruition. But for now, both the entities will have to respond to CCI within a stipulated timeline. Srinath, thank you very much for taking time out. Thank you for putting this into context for our viewers. We're of course tracking that story very, very closely here on News 9 Live. But it's time for a short break here. We'll be back in just a bit.
Hey, careful, huh? My daddy got it from abroad. Hey, disaster! How will you pay for the loss now?
In stock market, you should take risk as per your capacity and knowledge. Trade in options very carefully.
Wow, Dikra! Absolutely perfect. Take risk with full understanding.
Have not quite lived up to their pre-tournament billing, delivering a series of less than convincing performances. For 2 draws and a solitary win.
Your son will be Messi. No studies, just football all day. Go, my son, go. Make my face shine through playing football.
Not only your face, but also the country's. I will conquer the world by playing football. Come, let's go to Germany!
World's largest football talent hunt, News 9 Indian Tigers and Tigresses. In association with DFB Pokal, Bundesliga, BBB and India Football Center. Train and play matches in Europe. Register now and fly to Germany. IndianTigersandTigresses.com.
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
Terrorism always flows like water. It will go in the direction where there is no obstacle.
Bloodbath in Jammu. 5 soldiers die after terrorists open fire at an army convoy in Kothari.
Pakistan essentially is doing is opening a new frontier in the Jammu region.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Cooking is an act of love. The first act of love we receive from our mothers in the families.
Modern Indian food is all about contemporary and innovative approach to traditional Indian cooking.
Representation it's also important, you know.
I want to wear this white coat every day and then be a chef.
There are story. If the name of whiskey is Indri, then there is a whole story behind that.
Cooking food is like a therapy and eating one is like a pleasure I can give it to myself. With Lounge Nights, I'm on a journey to celebrate and recognize the best food and nightlife establishments in various cities across India.
Radico presents Lounge Nights every Saturday and Sunday only on News 9 Live.
This was the kind of terrain that mountaineers basically climb on. You're talking of peaks of 15,000 and 16,000 feet. You have trouble breathing, the cold, the high altitude, the dizziness, the enemy staring at your face. And in some of those cases, the Pakistanis were not even expending ammunition. They were throwing rocks at the Indian soldiers. That's how close it was.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
One of my friends was residing here. Every rainy season, he will take his mom or otherwise even the dog also, pet dog also, he will take the pet dog and go to the resort, which is at Banasura Sagar Dam. This time around, he didn't. So, completely washed out. There is no idea about my friend.
हमारा फैमिली में रिलेटेड फैमिली था और उसके रिलेशन में तकरीबन 20 लोग मरा हुआ। अभी हमको पता नहीं सलाह भी मिलेगा नहीं मिलेगा। अभी 5 दिन हो गया।
Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
In the heart of New York, an Indian spectacle unfolds. Step into the world of the elite saga. Featuring influential Indians who've rocked the globe. From culinary geniuses,
this has been nothing less than a dream,
to the wisdom of sages.
And which is why success can never be spelt without you.
Discover the stories behind the stars. Experience the magic behind the scenes. At the first Indian event at the Statue of Liberty. Watch the Elite Saga streaming only on News 9 Plus. Download now.
Welcome back. You're watching In Your Interest. The mutual funds data for the month of July has thrown up interesting trends and insights on people's investment habits. Data suggests that an increasingly higher number of investors have started to invest in mutual fund schemes. As a result of growing inclination of retail investors specifically to invest in financial markets via mutual funds, more assets are now held by individual investors in comparison to their institutional counterparts. Out of every 5 rupee worth industry assets in mutual fund universe, 3 are held by individual investors while the remaining by institutional investors. Now this as per data collected by Association of Mutual Fund Industry and these revelations has come by the way of AMFI. It is seen that a vast majority of individual assets are now held in equity assets. The love for equity is clear and visible as 86% of individual investors' assets are held in equity-oriented schemes, 9% in debt schemes and only 3% in money market schemes and 2% in ETFs as well as fund of funds. The total asset managed by mutual fund industry has also spiked nearly 40% from 46 trillion in July of 2023 to 64 trillion in July of 2024. What does it really tell you about how and where people are investing? Let's discuss that. My colleague Suyash Maheshwari here with me. Suyash, hi. This growing love for equity, how does one really explain it?
Certainly, Shweta, because if you look at the past 12-15 months, it's the retail investors and your domestic institutional investors that are providing this much needed support to the markets. Remember, we have seen a lot of things happen in the past, a lot of black swan events. We have seen war play out, COVID situation happened, and domestic institutional investors and retail institutional investors took every opportunity, every dip to bolster their positions. Whereas FIIs, foreign institutional investors, who remember are considered the primary drivers of emerging markets, when they were sitting on the sideline, or they were rather selling, retail investors and your domestic institutional investors were using every opportunity to buy into the Indian stock markets, and I think that has paid off dividends for them. We look at how the stock markets have performed. I mean, over the last 1 year, I think Nifty has given returns of about 24% or so. Small caps and mid caps have given returns in excess of 50%. So investors have clearly made money that has not been made in any other market.
Absolutely.
US markets have not done as well. Japanese markets have done well last year, but look at what is happening over there because of the Japanese yen trade or unwinding of it. So I think Indian markets have offered relatively less volatility compared to our global peers, and retail investors and retail confidence in the markets is clearly evident from this data.
And retail investment by individuals more than institutions, because come to think of it, and we're looking at division here of the assets, 86% of individual investors are investing in equity. Now you compare that to institutions investing in equity, it's 18%. So while DIIs are really uplifting and bolstering the market, there is no same confidence, at least in mutual funds it seems, and retail investors are playing it more safe.
Right. I think if you look at it, the data, this is mutual funds data, right? So I think domestic institutional investors are in general, they are taking exposure to equity directly. So they are going and investing in the markets directly instead of taking the mutual fund route, or your fund of fund route, or ETF for that matter. Where they invest in mutual fund is in debt schemes to pretty much average out the volatility or perhaps diversify their portfolio, whereas equity investors or retail investors in equity mutual funds, I think that is a responsible way of investing. One, because there is a fund manager involved, it takes the onus from you to make those investment calls, and some dedicated person is taking those calls on your behalf, and also diversifies your entire risk profile, right? Because instead of investing in a few stocks, you have exposure on multiple stocks. So for retail investors, but one thing I think is concerning is that they are heavily invested in just equity schemes, and their exposure to ETFs, which are exchange traded funds or debt schemes,
for individuals,
is relatively low compared to your developed markets. But I think as the Indian bonds will start getting included in the multiple indices like the JP Morgan index and the Bloomberg index, for that matter JP Morgan index bond inclusion has already begun. The Bloomberg index inclusion will begin next year. So I think once that happens, retail money will start trickling into the debt segment as well, because I think liquidity is not there and it gets very difficult for them to exit such markets.
All right, we keep saying mutual funds, Sahi, and we were looking at the numbers here, and those numbers are really reflecting. There's been a 40% uptick in mutual funds, the money that has been trickling into mutual funds. The people and their confidence is building in investing through mutual funds in capital markets. But for retail investors to be investing about 86% of their total investments into equity as opposed to debt, and any person will tell you debt is safer than equity. What are you making of the risk appetite of these people?
See, that's what I was saying, right? Look at the credit and deposit gap that we have witnessed in this country. That's at 20-year high. So basically what is happening, people want to take loans, but there is not enough money for banks to give loans, because FD is not as attractive anymore, right?
Absolutely.
At 8.75%, FD is giving worse return than any of these indices. FMCG, which has been a relative underperformer, has also given returns of about 14%. So why would an investor prefer to go in a fixed deposit instrument where the returns are much less? And look at how inflation has played out in this country.
7.5 to about 12 to 14%, which is what is expected from capital markets.
And inflation eats away 5% of that.
Absolutely. So the 5% shaved off from what you're earning from mutual funds as well. But before I let you go and before I close the show, I think it's also interesting and important to find out what happens in case of a black swan like event, because we often discuss that in case, I don't want to be a party pooper, but mutual funds were not to give you the kind of returns that they are giving right now. This high exposure to equity is not going to play very well for people.
Yes, but I would be more concerned about retail participation directly into the cash segment, because that they can sell their stocks right away, right? Because for mutual funds, because they are the ones making the calls, they are the ones deciding whether to hold a stock or not. I think wisdom will prevail over there. They will look at a particular black swan event as a black swan event and see what happened during COVID, right? Initially, we saw about a 25-30% crash in the market, but the markets pretty much recovered. It was a V-shaped recovery during the Ukraine war. Similar thing happened.
Right.
So the markets, yeah, they too tend to fall when a black swan event happened, but we have to believe in the recovery. And I think mutual funds, because they have such extensive experience in this industry, multiple years, I think they are better off handling the money of retail investors than retail investors themselves.
All right, so stay invested would be, of course, I think their wisdom and their mantra to their investors. But as far as data coming out there from AMFI, it looks like mutual fund sahi hai for a whole lot of people, especially individual investors as well as HNIs who seem to be investing more and far more than institutional investors in mutual funds. Those interesting insights as to how people are investing, steering a little away from FDs of late. That is what the data is suggesting, moving more into more riskier assets, equity funds in this case, and into mutual funds like never before. But with that, we have come to the end of the show. Thank you very much for watching.
Big fan of Ian Bell, watching him very classy in all formats.
I find Durban quite a challenge, which is still an enjoyable one.
You're not allowed to bowl a bouncer, so that tells you that they want to see runs on the board.
बड़े अच्छे टूर्स किए हैं, बड़ी अच्छी यादें हैं हर जगह की, जहाँ मैंने पर्सनली क्रिकेट को बहुत एंजॉय किया, ऑस्ट्रेलिया एंड इंडिया में बहुत ज़्यादा एंजॉय किया.
I love playing again England and India, and they were both very different challenges.
Up close and personal with legendary cricketers like never before. Icons of the pitch.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Give it to me, pass. We'll put new glasses in the windows and they keep breaking it. This is the fourth time. You are playing football throughout the day. Will you win the world by playing football?
Yes, uncle. I will now conquer the world by playing football. Let's go to Germany.
World's largest football talent hunt, News 9 Indian Tigers and Tigresses. In association with DFB Pokal, Bundesliga, BVB and India Football Center. Train and play matches in Europe. Register now and fly to Germany. IndianTigersandTigresses.com.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए।